Welcome to Pick a Headline, where I take headlines, good, bad, or exciting, and break them down into real data you can actually trust. Today's headline: Worst Florida housing markets facing steepest price declines in 2025. Sounds pretty serious, and it's from Norada Real Estate Investments, so it's a bit more data driven than your average headline. Let's talk about one of the hardest hit spots: Cape Coral, Fort Myers, and Lee County. We're seeing a noticeable 9.6% drop in median sales price, down to $374,825 as of July 2025, which is down 3.9% year over year. Probably due in part to Hurricane Ian, which hit in late 2022, and the recovery rebuilding insurance it's still dragging on. Check out this chart. It tracks single family homes in Lee County, both new and resale. After Ian, prices took a dive. Since then, you see ups and downs, some seasonal swings at the end of 2022, early 2023, and again through 2024. But here's the kicker: July 2025 prices dropped 3.9% compared to last year. That's not seasonality, it's something else. Let's overlay mortgage rates. Rates were high in July 2024 and activity dipped. July 2025 also shows a spread between interest rates and median prices. So what's going to happen next? Well, I don't know. We don't have a crystal ball. But Florida Realtor shared on August 6th, high mortgage rates are causing home sales to remain stuck at cyclical lows, from their chief economist, Lawrence Yun. Realtor.com expects rates to ease a bit by the end of the year, maybe down to 6.4 by late 2025, making on hopeful Fed rate cuts and steadier policy improvement. Sounds promising, but here's a reality check. Even if rates do drop to 6%, most people still won't be able to afford a typical home. Zillow's economist Anushna Prakash says rates would need to fall to 4.43% for medium income buyers to really afford homes. And that kind of drop would come with serious trade-offs, like slower economic growth and higher unemployment. Prakash warns if buyers are waiting for big drops in mortgage rates or prices to help affordability, they're in for a rude awakening. Just like falling rates, that kind of correction in house prices won't happen without a serious slowdown in economic growth and income growth and a rise in unemployment. Now, take a step back and think about the last few years. Everyone stopped buying at once, then started buying at once. Prices shot up, buyers waived contingencies, and I saw many paying up to 20K over appraisal. People were frustrated. They were mad at out of state buyers, cash investors, large companies, because it felt impossible to compete. Then the market corrected. Now we're in the middle. So here's my question for you: Is it worth waiting for rates to return to historic lows and compete? Or can you afford to buy now when fewer buyers are active? I'll leave you with a chart of historic mortgage rates so you can see the big picture. Subscribe to catch more of Pick a Headline, where we dish the hype and bring you facts that really matter.